Hello everyone, and welcome back to the XRP Ripple Insights channel, your GATA source for everything XRP. Today, we're diving into one of the most explosive topics currently stirring up the crypto world, the bold prediction that XRP could be on the brink of a 1,609% price surge. And, yes, you heard that right, imagine waking up to find your XRP holdings have multiplied over 16 times in value. While it might sound like wild speculation to the untrained ear, this theory is gaining serious momentum among crypto analysts, traders, and financial insiders. What's sparking this intense interest? It's a combination of mounting on-chain data, strategic global partnerships, and rumors of Ripple's behind-the-scenes work with government agencies and central banks. All these elements are forming a narrative that XRP is positioning itself as a cornerstone of future digital finance. With more than 450,000 active XRP wallet addresses showing strategic accumulation behavior and Ripple continuing to develop key technologies like RippleNet and on demand liquidity, investors are starting to ask if we're nearing a breakout moment. So today, we're putting all the pieces together from wallet behavior to Ripple's institutional influence so you can decide whether it's time to go all in or simply watch from the sidelines. Now let's break down where this jaw-dropping 1,609% figure is coming from, because it's not just wishful thinking or blind optimism. This number is rooted in detailed technical analysis and historical precedent. Many market analysts are pointing to chart patterns reminiscent of XRP's past parabolic moves, particularly the legendary bull run of 2017. During that time, XRP skyrocketed from under 1 cent to more than $3.40 in less than 12 months. That's not just an anomaly, it's a sign of what's possible when momentum, adoption, and investor sentiment align. Today, similar technical structures are being identified in XRP's price charts, including repeating Fibonacci retracement levels, symmetrical triangle formations, and long-term consolidation, zones that typically precede massive price breakouts. But what makes this more than just chart theory is the fundamental support Ripple is gaining. Ripple's core technology RippleNet is now integrated with dozens of banks and financial institutions worldwide, powering real-time, low-cost cross-border transactions. Central banks are also exploring Ripple's infrastructure as part of their digital currency pilots. All of these factors are giving investors more than just hope, they're giving them data-driven reasons to believe a 1,609% move could be more plausible than previously imagined. And if history repeats itself, those who position themselves early might be in for an extraordinary ride. Let's turn our attention to one of the most underappreciated but critical indicators.
This audio was created with podcastle.ai.
Attention to one of the most underappreciated but critical indicators in the XRP ecosystem, the presence of over 450,000 active XRP wallet addresses. At first glance, this might sound like a simple stat, but it carries profound strategic significance. On-chain analytics reveal that this broad and steadily growing distribution of wallets isn't just noise. It's a signal of mounting confidence from both retail and institutional investors. Unlike short-term traders who jump in and out of coins for quick profits, many of these wallets are showing consistent accumulation patterns. That means they're buying XRP and holding it, often increasing their positions during periods of market consolidation or minor dips. What's especially compelling is that a significant portion of these wallets belong to so-called whales addresses holding millions of XRP tokens. Historically, whale activity has been a leading indicator of market direction, and right now, those wallets are showing increasing confidence. Additionally, many of these addresses are associated with RippleNet partners, fintech firms, and payment providers rather than speculative traders. This implies that XRP is not just being held as a speculative asset, but is being used and stored for real-world financial operations. That level of strategic utility gives the entire XRP ecosystem more stability, and it strengthens the case that a major price movement could be backed by fundamentals, not just hype. Beyond wallet activity and price speculation, what truly sets XRP apart from many other cryptocurrencies is Ripple's growing influence behind the scenes, particularly its potential alignment with future global financial infrastructure. Over the past several years, Ripple has positioned itself not just as a blockchain startup, but as a serious technology provider, working closely with banks, financial institutions, and potentially even governments. And there have been persistent rumors, some supported by indirect evidence, suggesting that Ripple may be collaborating with central banks on the development of central bank digital currencies, CBDC. This would make XRP a key player in cross-border payment infrastructure at a time when traditional systems are being reimagined for the digital age. Ripple's technologies like on-demand liquidity ODL and the XRP ledger are already being stress-tested in real-world financial environments. If those partnerships become formalized and scale globally, XRP could serve as the bridge currency facilitating trillions in cross-border flows. That's not speculation, that's a scalable use case with real economic impact. Moreover, Ripple's ongoing legal battle with the U.S. Securities and Exchange Commission (SEC) may be approaching a pivotal resolution. A favorable outcome could clear the regulatory clouds over XRP, opening the doors to institutional adoption at scale. In short, Ripple is quietly laying the groundwork for something much bigger, and XRP might be at the center of that transformation. Now we arrive at one of the most controversial and intriguing aspects of the Ripple narrative, its alleged connections to major government agencies and regulatory bodies. For years, whispers and rumors have circulated within crypto circles suggesting that Ripple has been strategically building relationships with key institutions that hold the power to shape the future of finance. While it's easy to dismiss these as mere speculation, there's growing evidence to support the idea that Ripple isn't just a participant in the financial revolution, it's a potential architect. For starters, Ripple is an official member of the Digital Dollar Project, a high-profile initiative aiming to develop a U.S. central bank digital currency, CBDC. That alone positions Ripple among a select few companies trusted to help shape America's digital monetary future. Add to that its previous work with the Bank of England and its active participation in pilot programs with various central banks around the world exploring CBDC.
This audio was created with Podcastle.ai.
With various central banks around the world exploring CBDC, and it becomes clear that Ripple is deeply embedded in the financial fabric being woven behind the scenes. Ripple executives haven't been shy about making appearances on global stages either. Company leaders have participated in high-level discussions alongside IMF officials, World Economic Forum panels, and U.S. Treasury roundtables. These aren't casual speaking engagements, they indicate strategic collaboration and influence. Ripple's persistent push for regulatory clarity in the U.S. is also worth noting. Unlike many crypto projects that shy away from government oversight, Ripple has actively lobbied for well-defined rules, signaling that it doesn't fear regulation, it welcomes it. This proactive stance could give Ripple a major competitive edge in a future where governments clamp down on unregulated, anonymous digital assets. If Ripple emerges as the compliant, government-aligned platform for real-time tokenized fiat settlements and cross-border payments, XRP could transform into a core utility asset in the global backend economy. That's not science fiction anymore, it's already unfolding. The only real question left is whether the public catches on before the price action reflects Ripple's expanding influence. Because by the time everyone else realizes what's happening, it might already be too late to get in at these levels. As we wrap up today's deep dive into Ripple and XRP's potential future, one thing is clear. The signs are becoming too big to ignore. Whether it's the 1,609% price prediction based on past performance and technical indicators, the massive wallet accumulation signaling investor confidence, or Ripple's growing presence within elite financial institutions and government circles, XRP is emerging as one of the most strategically positioned digital assets in the entire crypto ecosystem. The over 450,000 active wallets holding XRP aren't just casual investors. Many of them are institutions, whales, and long-term believers who are actively preparing for what could be the next major wave. And let's not forget, Ripple isn't a company chasing hype. It's one that's building real utility and solving real problems in global finance. Ripple's partnerships with banks, central banks, and financial regulators put it in a rare and powerful position as blockchain adoption accelerates. If XRP becomes the go-to digital asset for powering cross-border transactions or enabling the liquidity layer of CBDC systems, then today's prices might look like a bargain in retrospect. We're standing at a unique crossroads in digital finance history, where opportunity and timing are everything. So ask yourself this: will you be one of the informed few who sees the setup and acts before the breakout? Or will you be one of the many watching headlines from the sidelines, wishing you'd acted sooner? The XRP wave is forming, and just like any wave, you can either ride it or watch it pass you by.
This audio was created with podcastle.ai.